Welcome back to Explain the Charts, your go-to channel for comprehensive market insights. Today, July 31st, 2025, we're dissecting the recent movements of SPY, the S&P 500 ETF, by combining fundamental news with detailed technical analysis. Let's start by looking at the broader picture on the daily chart. As you can see, the overall long-term trend for SPY remains decidedly bullish, having advanced significantly from its lows around $510 in March 2024 to current levels above $630. However, recent days have introduced some volatility. Shifting our focus to current events, recent news suggests a mixed bag for the S&P 500. Just yesterday, the market saw a slip from record highs, partly attributed to the Federal Reserve holding interest rates steady. While this decision signals stability and avoids further tightening, it might also mean a pause in new monetary catalysts for growth. The ongoing China talks in limbo also contribute to an overarching sense of geopolitical uncertainty, impacting market sentiment. This aligns with the last 3 daily candles on SPY, which have shown slight pullbacks or indecision following new record highs set just a few days ago on July 29th. The high on July 29th was $638.67, representing a new peak in our dataset. However, there's a strong counter-narrative emerging from the tech sector. Live reports indicate S&P 500 futures are jumping after major tech giants like Meta and Microsoft posted impressive quarterly earnings beats. This bullish sentiment is a powerful force, potentially mitigating the recent dips and pushing the market higher. This positive tech momentum is also reinforced by news of AI demand boosting earnings for companies like Corning, underscoring broader sectoral strength. Adding to the optimism, Oppenheimer Asset Management has recently raised its S&P 500 target to an ambitious 7,100, signaling significant upside potential from a long-term perspective. Now let's zoom into the hourly chart to observe the recent price action in more detail, particularly the last few trading days. You can clearly see how SPY consolidated around the 636 to 638 range during July 28th and 29th, failing to maintain its highest levels. A notable bearish move occurred on July 30th, where the price began a more pronounced decline. This sell-off pushed SPY down to an intraday low around $631.54, marking a key short-term support level that bulls needed to defend. This hourly view highlights the immediate impact of market uncertainty, leading to profit-taking or short-term bearish plays. To truly understand the recent reversal, let's switch to the 15-minute chart and focus on the intense trading activity of July 30th from late afternoon UTC. Here, we see the sharp decline around 1843 Universal Time Coordinated, with significant selling pressure pushing SPY from around $636 down to that crucial $631.54 low by 1858 Universal Time Coordinated. This low point acts as a very strong immediate support level that buyers stepped in to defend. What's fascinating is the immediate and powerful reversal that followed. From that $631.54 low, SPY witnessed a robust bounce, closing the day's 15-minute trading at approximately $638.95. This rapid rebound correlates directly with the news of strong big tech earnings, demonstrating how quickly market sentiment can shift based on new fundamental data. The surge in volume accompanying this rebound confirms significant buying interest at these lower levels. Reverting to the daily chart for our recap, the short-term trend is currently defined by a slight pullback from recent highs, forming a resistance zone around $637.58 to $638.67. However, the strong bounce observed on the 15-minute chart suggests that this pullback found immediate support, indicating robust demand. The crucial short-term support to watch is $631.54, which held firm during the recent intraday dip. A breach of this level could signal a deeper correction, potentially targeting the prior resistance turned support around $610 to $615 seen in June 2025. For long-term investors, a more significant support lies around the $480 to $490 range, established during the April 2025 correction. This area would represent a significant buying opportunity if a more severe downturn were to occur. Looking ahead, reasons to be bullish on SPY in the short to medium term include the impressive tech earnings season, which provides a strong fundamental tailwind. The overall upward trajectory of the daily chart, driven by underlying economic strength and corporate profits, continues to favor the bulls. Furthermore, Oppenheimer's raised price target of 7,100 adds significant long-term bullish conviction. However, reasons for caution or a bearish stance include the recent failure to decisively break above new records, indicating some resistance at these elevated levels. The lingering uncertainty around China trade talks could also introduce volatility if no clear resolution emerges. If the $631.54 support level is broken convincingly on higher volume, it would signal a shift towards a short-term bearish outlook, making previous resistance levels like $610 to $615 potential downside targets. In summary, the important price levels to monitor are the immediate support at $631.54 and the all-time high resistance at $638.67. For unbiased predictions, the most likely scenario, with a high probability, is a continued push higher towards testing the $638.67 resistance and potentially breaking $640 in the short term. This is reinforced by the current positive sentiment from tech earnings and the robust rebound from recent lows. However, a moderate probability exists for a deeper consolidation or pullback if positive catalysts fade or new negative news emerges. In this case, a break below $631.54 could see SPY retrace towards the $610 to $615 area. When deciding when and what price to trade, look for sustained closes above $638.67 for long entries, or a clear break and retest of $631.54 as resistance for short positions. Keep an eye on upcoming earnings reports from other major S&P 500 constituents and any new commentary from the Federal Reserve or developments in global trade relations. These events will be key in shaping SPY's direction in the coming weeks. That's all for this in-depth analysis on SPY here on Explain the Charts. Be sure to like, subscribe, and hit the notification bell for more market insights.